Hello, ni hao. I am called Rocky Outcrop. 我叫延禧路道. This is Bitcoin and Ethereum technical analysis. Thanks so much for joining me. Can we go up to those 20,000 Bitcoin highs, or will we go down to the 5,000 Bitcoin lows? Let's take a look at the in-between stuff. Can we go up to those 577 highs for Ethereum, or will we go down to the 241 lows? Let's take a look at the in-between stuff for that. Thanks so much for joining me. Let's dive on into the charts. So friends, hi, thank you. This is a Bitcoin chart that I have up behind me, just describing the recent price action. How about I jump over here to the Google Translate and tell you what I was trying to say at the start there, just so that if you do speak Chinese, you can understand it. Hello, I am called Rocky Outcrop. Ni hao, 我叫延禧路道. Luo Tao. I'm struggling with that. Luo Tao. Anyway, I'll do that in my own time, I suppose. And I've got a Fibonacci retracement in the background here. If I just take off the extend right and left, then you can see where this is drawn in from more easily. We have it drawn in from the lows that we had since we came up and up to this sort of general region after that impulse move up. So the low on the 21st of October up to the high that we had here on the 31st of October. Just going to take a second right now to say 31st of October, last day of the month. What did I call the video on Friday there? I called it a peak at the end of the month. Now, of course, that was me making a play on words. A sneak peek, a look forward, a little peek into the future. That's what that was, because the end of the month was coming up the day after. But of course, as well, I was trying to make a point that there could be a peak at the end of the month. You'll have noticed the Rocky Outcrop I put in the background of the thumbnail. And this is then, of course, the Fibonacci retracement, starting off from those, from that impulse at the low, the most significant low that we've had since coming up above the 12,000 region. And then, and as well, by the way, that's in there at 12,608. So that's the low that follows on, putting in a high compared to over here in August when we had our peak. Sorry, you can't see the price action there, but there you go. So that's why I put the Fibonacci there. And then I have it drawn up to those highs. Let me just extend that left and right again. So it's all beautiful and covering up the price action. As well, actually, I'll hide the Bollinger Bands right now. Don't know how much I'll talk about them in the episode, but let me just be clear. 4-hour Bollinger Bands moved down, hit this bottom part, moved outside of the Bollinger Band area, back inside it now. If we see this tracing it, like we've seen it tracing it in the past, then you know this could be going on further. If we see it turning up towards the median line, which is coming in there currently on the 4-hour time frame at 13,600, then you know that things have potentially turned around again. Bear that number in mind, 13,675. That's where the median line is of that. We'll cover across that number again in a few moments. But first off then, what have we done with regards to this area, hiding the Bollinger Bands and coming down here? Well, we came down all the way down to our 54 period exponential moving average in here at the 50% area, and then stretched on beyond it down towards the 618, hitting that perfectly before coming back up the way. The 618 is in there at $13,205. If we see the prices dropping down past that, then be very aware of what's going on. We currently have, in terms of this 4-hour time frame, the potential for the 10 exponential period moving average to be crossing over the 18 exponential period moving average. By the way, I am currently using 4 smaller numbers rather than what I usually use. 10, 18, 36, and 54. They are the atomic magic numbers, the very important numbers. And great for this sort of a job right now that we're doing. Of course, bear in mind this period over here on the 29th of October, when we saw a kiss between the 10 and the 18, and then it of course sprang away from itself, having put in a higher low and moved towards the top side. What do we have then, therefore, that distinguishes where we are right now to where we were just then? In general terms, looking at the price action just here, we did similar sort of stuff, you know, up, put in a peak, drop down the way, then in the next couple of days, up, put in a peak, drop down the way the next couple of days. And this, of course, could just be that higher low. What distinguishes it from then? Well, at this point here, where we had our high compared to our previous high, very much bearishly divergent. Now, this was also a bearishly divergent high compared to its previous high, but the And this was also a bearishly divergent high compared to its previous high. But what do we have now is that it's just that yet another bearishly divergent high before a low. So it's more and more and more. It's kind of adding up to become a bit much a burden to bear for us. So there's that aspect of things where it's obviously an increase of an already pre-existing scenario. What else do we have here when we were coming in for these lows? Well, we just pushed past the neutral area, then came down and crossed around the stochastics here just at the time when just after we kissed, just with this reactionary candle towards the top side after having put in our low, coming back up again. This is kind of showing us this here. What we have at the minute is us coming down, and we've not got anywhere near sort of crossing just yet. Of course, this could happen fairly quickly should it need to. Currently spread out towards the downside, and what do we see here is actually lower. Now, this is an upward trend, and this is a higher low, so we could make the argument that this is, of course, hidden bullish divergence. Looking here at the RSI, you could also say the same thing, that we have hidden bullish divergence coming in with this. Let's just hold on and don't count our chickens before they hatch, though, with regards to this. Very much premature. Convergence could just be the order of the day if things go on down the way thereafter. Okay, just a little warning, but there it is. But what's the main distinguishing factor? Well, we could maybe look at it here at this point. We saw that that in the 28th of October at 12 that there was around about 12 to 11, 12, that there was a cross between the negative and the positive. Then afterwards, it went down the way. What we saw here was a cross between the negative and positive back over here. Then we came in and actually put in that low, and there was that kiss. And at the time of that low, what do we see happening? Well, the cross then crossed back over the way again, putting in a positive cross with this strength of trend still in place. And we moved towards the top side, having actually put in ever so slightly bearishly divergent highs along the way, but there it was, and we moved up the way. This time around, however, this looks different. You can see the closeness between the positive and the negative here. You can see the distance between the positive and negative. You can see that while we have while this was in a position of strength of trend, that this here is in a position of strength of trend just as well. It's really quite close to being 25 instead of below 25. And we're here looking like we could see the negative DI cross the ADX. And when that happens, then things are a little bit more interesting. So let's be aware there are some differences here. And that's why convergence could be the order of the day should that just extend on the way. Now, there was that number that I said earlier on, 13,670, was it? 13,665, 13,660. I can't remember what it was. I said bear it in mind. Did you bear it in mind? Did you? I wonder. Let's have a look here and see if you can see where the significance of that number comes in at for us. Well, and then my sentence falls apart as I realize this is the wrong Fibonacci to be looking at. Have I got another Fibonacci on here? I was going to make the point that that there's a 236 somewhere in around about that 13,660 area. I'm not seeing that on this particular chart. That's cool. We don't need to worry about that. What we do see instead is that we came in here and crossed over this line of this big formation here that got to the 24-hour time frame. This is what's enabled us to talk about things like 20K. Where's my wee text box here? This is what's allowed us to talk about 20K, 18K, 8K, and 5K in terms of Bitcoin pricing. Crossing over that line at the sort of 13,650 area was, of course, of significance to us. We're now down below there and testing the 10 period on the daily, and it's obviously just kind of moved to being flat. Do I have a 236 in somewhere else which could actually have been that number that I was looking for in terms of 13,600? I'm not sure about that, but that's cool. Don't need to worry about it. I just think I got confused between the crossing point of that pattern and the 236. Anyway, you can see that's what's happened. In terms of CME charts, by the way, we had no gap on there. Maybe there might have been one on the 15-minute or something, but we had no gap that was worth talking about for sure. And what we see here is that we've come up towards this top area where we put in a previous high, having not actually managed to supersede that previous high on the 1st of November compared to the 27th of October. Looking over here at spot prices, you can see the 1st of November actually opened and closed here above the 27th of October there on the CME charts, we're actually still within the 1st of November, given the way that these things are timed. Obviously, today is the 2nd, but you get the point. And we've not managed to open and close above that zone. It's a different picture that we're seeing here. Movements down below 13,200, of course, going to be important. In terms of the grand picture of things, the CME's movements down below the 13,000 is really the key area for us of note, because then we've been moving down the way towards potential targets much lower. Of course, that's where our 236 is. Now, there was something else I wanted to talk about in today's episode, and I think it is pertinent. Let me just find where I would have Fibonacci. I could do this using the fib extension that I'd drawn in before, perhaps. Right. Okay. We can talk about downside targets in terms of fib extensions in just a second. Let me just hide that. Where were the other? We can talk about it in terms of that low as well. Where am I looking for? I'm looking for Fibonacci extensions that took us up towards the top side. Yeah, there we go. This is the perfect one. Let me just hide this fib retracement. So we had, and I'll just make this go from not extended so you can see where I've drawn it in from. Okay, so we have that high and that low. This is our Fibonacci retracement. And if I just extend this left and right and show you the extensions, where did we come? Well, we came all the way up to the 1618. This is a significant area. The head and shoulders up there, 17th of August highs. Then we have the 5th of September lows. Very significant part of this upward trend in terms of key peak areas, pivot points in the market and everything else. And of course, then we came up to the 1618 of that. So we're up there in Fibonacci extension heaven, getting up towards that 1618, move down below the 1414. If we see ourselves moving down below the 1272, that's at 13,239, again tying in with our previous chat, and of course the 10 exponential, then we could see things of course kick off down the way again. And so when we're operating up here in Fibonacci extension land, you know that things have become fairly extended. We can then put on our Fibonacci extension, which comes in from the September lows up to where we are just now. See that 13,111 is of course key importance in terms of this. This is of course being the September low to the October high, here to here, Fibonacci retracement, bringing us down. That would be 13,111 as your key pivot point. Then targets 12,500, 12,000, 11,500 thereafter. But in terms of this Fibonacci, trend-based Fibonacci extension, drawn in from actually not from very, very far back. Looking at this with a key insight into the just drawing it on the very, very small time frames, just so you can see here from the highs that we had up there on the 28th of October down to the lows that we had down here on the 28th of October, in that period of whippage, which were really, which really caught a lot of people, up to our subsequent highs here on the 31st of October, encapsulating that peak. So we had the volatility leading up to this peak where we potentially had our top in this area. Now, of course, all of this is caveated. And by the way, just remember, the trend is your friend until the end of the trend. None of this is saying that the trend has ended. Okay, this is just looking at the realities on the ground. This Fibonacci extension. So if we were to want to go up and do the same scenario that we just did in terms of the extension from a different key area going up to the 1272, the 1414, with an ultimate target of the 1618, that comes in at 12,928, so 13,000 for the 1272. The 1414 comes in there at 12,800, and then the 1618 comes in there at 12,600. Those be key areas if we see the prices turn around from them. Coolly schmooly, we've just done some standard extensions. Do not want to see us coming down towards the 2 area on this one. Obviously, that's moved past the significant areres we've spoken about in the just 5 minutes ago there in terms of this one. 14 minutes into this one, I think we've done quite well. We've covered off a lot of stuff. I've not drawn in every single time frame in every single instance reference to these oscillators down below. For those sorts of comments, it's all about subscribing to the channel. Subscribe, you'll learn all of this yourself, you'll be able to apply it all to your own charting. I'm just showing you the key takeaways, the big headline stuff which you otherwise maybe might overlook. I could, of course, look at several different things along the way. Look at this low compared to the previous lows. Look at this Look at this low compared to the previous low. It's higher than this previous one on here, which is, you know, lower on the price action here on the 50-minute time frame. I mean, I could be doing that sort of stuff and everything else, and then say, well, look, you know, we have these targets up above, got these moving averages, etc., etc. But I'm not going to go into extreme detail because that's what makes the episodes last forever and ever. And I think instead, actually, I've covered off the main stuff that you need to know to put into the context of what you're looking at. Otherwise, you might be overlooking something. Okay, I think I've covered off that main chunk of stuff for us. Just now, I would say 24-hour time frame. Let's look for these things to hold in place and then just drop down a time frame. You can see the downward slope on the 12 hours dropping down to the 4 hours. You can see the cross coming in. Did I talk about the cross already? And yeah, the similarities between when we crossed previously, etc., and the DMI. I certainly did. That was important. And you can see them all having crossed over fully by the time you get down to the 1 hour time frame. Having had not actually done that up until really this point just here. So this is when everything's get to that area where you start saying, hey, let's look out and see if this turns into a trend of some sort or not. Now, the other thing to look to, of course, is the Ethereum pricing. Now, this is, of course, the section of the video which appeals to people who are trading Ethereum who may not even watch the previous section of the video. They'd obviously be missing out on quite a lot if you've just watched through to this point. You'll know yourself there's a lot of value there. But, of course, it's understandable that people are maybe just trading this one coin. What do I look for in terms of when I'm trading this coin? Well, I look at the Bitcoin prices too, because not only do I trade Bitcoin, I also trade Ethereum. And I consider divergences between the two charts as being of note and worth considering when we're looking at price action. Let's revisit the peak at the end of the month here and show us that in terms of the Ethereum pricing, that we did come up and have a little sort of rise up the way at the end of the month, but actually we'd had that just before the end of the month and we were more concerned about a few other things on the go. And in fact, their big peak in terms of price action happened over there in September, a couple of weeks after the Bitcoin peak. But now looking back the way, we can see that this was very much in the past where we are, and whereas Bitcoin had its peak just the day before yesterday. So very big difference, a month difference in terms of where the peaks came in at. So there's divergence there just in terms of the performance of this asset versus the other big daddy-o in the market. A couple of key things to look to. Right now, we've come back up in terms of the peak at the end of the month and the start of this new month. We're at the top end of our ascending triangle. I have got this ascending triangle drawn in here using a triangle from the blooming triangle shape box. You better be proud of me. I used one of these things. I never usually do bother with that sort of stuff. And that's of note. I've also got it used. I also used like the light. There we go. That's a bit better. The light anchor thing for this. Whatever. Maybe that's not better. In fact, yeah, that's better. Yeah, that is better. Yeah, this is what I wanted. And yeah, the light magnet thing, this weak magnet is handy for some things like this. What we're also could be looking at, of course, quite obvious. Don't let me distract you too much. The light anchor thing is then incredibly unhandy when I'm kind of trying to make these wee rough points. But there you go. What we could be looking at is a wedge in this area. That would be a rising wedge. So just be aware of that. But we also have, in terms of the bigger, broader picture, the things which I grouped up because I said I promised you last week that I would, and I have done now. So we have a diamond here. If I just show this, I'll go up towards the 3-day time frame, zoom right out. So we have a diamond, which could be a top. Obviously, those are commonly reversal patterns. You often see people talking about them. Most often, the people you see talking about diamonds are very inexperienced. Here's a diamond, and you can see that there. Anyway, more commonly, they're reversal patterns. We'll have to look towards other factors. We have that triangle that I was talking about. I've just hidden it. We also have a wedge here, which is what I was just kind of getting at as well, which I've hidden. Now, there's a moving there's a target here for this thing. Of course, if we manage to actually properly get back inside this, which yesterday it looked more like we were able to do. Today, obviously falling back down the way. Targets could take you up to as high as, of course, the $500 area. But looking down the way, if we were to break down from this, then we've got a few targets in mind. Putting the diamond back on at this point here to make the point, you can see that movements down outside of this are also breaking outside of the diamond area. And then, of course, this is very much not the measured move from the diamond. Believe me, it's it's a chunk of it, but it's not the full thing. So we could see the prices go as far as, that 241, where you could get your double up on your Bitcoin or your Ethereum at 241. We've loved doing that on the channel. We love it. Wouldn't it be great if that happened again? We'd all love it. 2 for 1 Bitcoin, 2 for 1 Bitcoin, 2 for 1, 2 for 1. But let's not get too carried away with that just yet, and instead say that this 351 area where we can see the 34 period or 36 period moving average, exponential moving average coming in there at that 618 golden pocket at 351 would be of key importance for us if we do break down. 380 is of course the first most important target. In terms of this most recent price action, could I just it would be handy if there was a button here to hide everything. If there is one and I'm not aware of it, just tell me. I know that there's this one over here, but that hides everything sort of temporarily. I don't want to be, I can't just sort of semi-hide stuff. Anyway, what I wanted to show is there's this movement, this Fibonacci here. Let me just hide the other ones, in fact. That'll make it easier. There's this Fibonacci here, which we're currently operating with. There's a couple of different ways that we could do this one. So let's just extend the lines out left and right. Take a look at it and say, well, this is our this was our low over here. In fact, seems I've got that drawn in slightly wrong. I had it drawn in from that low. Let me draw it in from this low instead. That would be more appropriate in my opinion. Up towards this high here, and the 236 then comes in at 395 buckaroonies. That should be of no surprise. The 382 is in there at 379. This is lining up freakily with another Fibonacci that we've got on the go here. What's going on? Where's this other Fibonacci from? This one, horizontal ray. No, this one. Oh my goodness, what have I done? What have I done? So there's no, it's not lining up with it. I was just being blind and getting confused between a horizontal ray and a line. Whoops, maybe have to edit that out. Maybe not, depends. Normally don't like editing my videos. So yeah, anyway, sorry for the confusion. Just saw this going through the line. The reason I've been so confused by this is actually, here's the reason I got confused, because it wasn't lining up with, it was, the numbers were being scored through. So if I just put the numbers on top, then they're not getting scored through and it's not lining up. There we go. That's it. Perfect. So we could be looking between these areas, but of course this is not including the peak high and low here of the recent price action. Instead, let's draw in another comparative Fibonacci just to see how we're doing in terms of retracing back up since the shocking high and low movement at the start of September. So let's hide this one and put one in here instead, coming in from this high down to this low, and then of course this Fibonacci remained valid from the point that we moved up above 351 bucks, and we've come up towards these top sides. This gets invalidated with movements down below 351 bucks. That ties in with what we were saying earlier on. It's no surprise to me. Top area targets 420. That ties in with everything we've spoken about in the recent past. So there's no surprise to me how that all ties together. Looking here at the 350 area where you have the 618 then with this subsequent Fibonacci. Hope you're taking the value away from this. I'm not going to bother looking down there at the oscillators. Suffice it to say that the stochastics very much pointing down the way on this 3-day time frame, 2-day time frame pointing down the way, 24-hour time frame pointing down the way. They looked like they could cross, but it didn't happen. 12-hour time frame pointing down the way. Look, we had a rise up here. It's ended. 4-hour time frame down the way, 3-hour time frame down the way. Need I go on? Well, there's the 1 hour. There's your hope for a movement around the way. If you are going to be positive on this thing right now, then you're looking for a few things to happen. This 1 hour time frame kind of says it all with this mishmash of the moving averages just here. Need to see prices at the 387s get taken out, and in fact, moving back into the diamond at 388 or 390. Actually, moving back into that triangle really, or the wedge even at 391. All those things need to happen. You'd get past the moving averages if that was the case. Otherwise, these have all just crossed towards the downside, and currently we're waiting on them really moving down past the 56. We've got the 10 and the 18 move past the 56. The 34, the 54. The 36 is coming in for the 56 or 54. Sorry, at the minute. Could they cross over? And you can see the same thing happening. It's the evolution of this across the time frames. That's going to do with this with Ethereum for the dollar. And let's take a look at Ethereum versus the Bitcoiner. So I need to go to 24-hour time frame for this. You can see here that we've had more or less everything happen as predicted. You could say, I use that word loosely. I always use the word predicted loosely when I use it on the charts. But if you're going to go to any YouTube channel for predictions of any sort, then you come to the right place. We do risk management. We don't do predictions. We don't try and mess you around. We're not in it for the views and everything else. We're in it for the reality, to help people, to actually help people. That's why I do this. Like and subscribe, please. We had this wedge down the way. We've now had a movement towards the top side. It's pretty weak. It's a pretty small wedge that you're talking about. Measured moves outside of this thing take you up towards the 18 period moving average, back to that 30. Of course, 0.030 as opposed to 0.028. So that's, I'm calling this 28. I'd call that price 30. Okay, 0.030. That's the key pivot area for us within the sort of the median line of this wedge here. With the chances of this then turn into a positive one, that would be your first port of call. If we do sustain movements down below these areas of the 28, 28, 28, 28, 28, 28, as we've spoken about recently, 28, 28. Don't let me not be heard saying that. That also applies to Chainlink, by the way, that number. Then we're looking down the way towards the 25 area. This is doing what we expected it to do. Volatility ended there, whatever. Lower time frames, volatility. Oh, there was something I was going to mention about Bitcoin. Look at this, by the way. Volatility. Look at this. Look at this. Look at this. Do you see it? Do you see it? See the volatility here? Came in. We came down, up, down, back to where we started. Then the volatility in the background kicked in again. Then all the way over here. Look. Ended here. On the DMI, it ended here. Right? It ended. Then 1, 2, 3 hours later, the prices crashed. 1 to 3 hours later. Okay? Free. If you want this thing for free, I'll give it to you. Just ask me. And yeah, screw it. We're done here. Nice one. Thanks so much for joining me for this episode. Give me a second. Thank you for joining me today. Okay, let's just say that. I'm not good at this. I'm just starting. 谢谢你坚强加入我 I can't say that. I can't. That's so embarrassing.
谢谢你今天加入我。
Oh, isn't that bad? 谢谢你坚强加入我。
谢谢你今天加入我。
今天，谢谢你今天加入我。
谢谢你今天加入我。
Okay, cool. Thanks. See you next time. Oh, hit that subscribe button. Yeah, nice. See you next time. Share your friends. YouTube.com/Rocky Outcrop. Yeah.